I don't use Trendline the same way that other traders use them. But I know Trendline is one of the most profitable, simple strategy out there. So in today's lesson, I'm going to show you how I personally use Trendline, how Trendline actually work, and my personal top-down 3-step approach that makes it very profitable for me. So if you're a returning subscriber, thank you for always being supportive. I love you guys so much. And if you are new to the channel, please consider subscribing by smashing that subscribe button, turn off the notification bell in order not to miss the upcoming content that will be released. So without much ado, let's dive into it. All right. So first and foremost, what is Trendline? It's basically that's when we have like 1, 2, 3 touch points. This is a typical trend line pointing down towards the downside. We call this the downtrend and the downtrend. And when we have like 1, 2, 3, we call it an uptrend. So trend line, according to me, is said to be valid when we have first touch points, second, and preferably third. And we expect the fourth one to tap and drop. Likewise, when we have an uptrend in this format, and we have the first touch point, second touch point, third touch point, and we expect the fourth one to touch and actually skyrocket or go towards the upside in an uptrend. Now, there are two ways in which trend line is traditionally traded in the market or in the industry per se. One is the continuation model, whereby we have the first touch points, the second touch point, and we expect the third touch point to tap, bounce on this trend line, and continue with the upward movement. And the second one is when we have an uptrend in this format, and there is a break of a trend line, we expect a retest of that trend line and a drop. That I call the reversal. But there's a problem with this traditional way of trading it, especially in the case of the reversal. And I'm going to explain. Now, when there is a break of a trend line, just like what you are seeing exactly here, that does not necessarily mean that the trend has actually changed. So a break of a trend line is not a confirmation that the trend has actually reversed or changed. And that's more often than not happens whenever a particular trader does not take into account the structure of the market that is being printed on the chart. Take, for example, we have a high here, we have a low, we have a high, we have a low, we have a high, we have a low. Until this low is being broken, the trend has not reversed. So the traditional way of when a trend line is broken, we look for entry points here to shut the market down. It's actually not profitable. And let's go right into the chart. Let me show you typically an example with it. Now, we have a trend line here, typical enough, right? I pinpoint this example and possibly the current trade I'm in, we'll get back there. That would be the second example. Now, we have a trend line here, typical example here. This is a downtrend, fine, right? This is an uptrend, fine. Look at when there is a reversal here, the break of a trend line rather. Are you going to take a shot from here, shutting this market down? No, it doesn't work out that way. It doesn't work out that way because this market printed a higher high, a higher low, a higher high, higher low, higher high. So until this low here is being taken or violated, this trend has not actually reversed. This is the first example, right? Until this low is being taken, come on, then the trend has not changed. Or it has not, the market is not about to reverse here. We are still in an uptrend. And because the reason why is because from this low here to this high here is just one leg movement, and we expect a pullback, then a continuation. All right, let's go to this current trade I'm in and how I actually map out the trend line. And you see from my personal approach to trading trend line. This current chart here, look at, I normally have my trend line map out and see. You can see I have the first touch point, second touch point, third touch point. This makes this trend line valid for me. This second line you're seeing here is a lower time frame trend line. That's the 8-hourly time frame. I have the first touch point, the second touch point, the third touch point. It makes this trend line valid for me. And this third trend line you're seeing here is the 4-hourly time frame, which makes it valid. 1, 2, 3, valid. In fact, this have more than one touch point. Now the question is, at the break of this trend line exactly at this point, does that validate that I should start looking for shorts? No. Not at all, because if I take into account of the structure of the market, it's simply higher high, higher low, higher high, higher low, higher high. So my expectation is simple. Wait for the pullback of this line and take the next what? The next impulsive leg up. Until this particular low here is being violated, then I have no reason to start shorting this particular pair until this low. This is the lowest point of this price action I can see. Until this low is being violated, I have no right to start what? Shorting the market. And you can see I'm currently in a trade exactly at this particular point. I took a trade here exactly at this point. Yes, it went up. I think it was, I actually closed it in profit, then reversed back. But that does not mean I should start shorting the market. Why? Because the price is still speaking uptrend. Now, that brings me to the concept of change of character. Change of character is one of the key concepts that play a major role in my trading strategy. And it's simple. When I have a trending market, right, and I have suddenly a violation of this low here, this is what I call, or what is being referred as, to change of character. When I have this, what it tells me, the trend has actually changed. Irrespective of whether the trend line actually got broken or not, the trend has actually changed. And if this happened alongside with the trend line, that is a double confirmation for me, right? So when I have a trend line, and it's mostly used on the lower time frame, my entry time frame, I'm going to dive into the breakdown of this simple trade that's currently running here. And it's mostly used in my entry time frame. When I have a change of character in this format, what I look for is an imbalance on this particular leg. So once I have an imbalance on this particular leg, what I normally do is to place my entry either short or long on this particular zone with my stop loss above the high and target the next liquidity below. And rather, so in a downtrend, when I have a change of character, is to look for imbalance within that leg, then execute my trade with the expectation that it's going to flow. And I'll allow the trade to play out. In case whereby there is no imbalance, if you're not comfortable, I would suggest, if you're a newbie, allow the trade, then wait for another opportunity. But if you must get into the trade, then your trade must be on the consequent encroachment of the order block, staying above this particular level here. I think someone asked me this question before, and I've answered it in the comment section or thereabout. Okay, so this is the major thing here. Change of character on the lower time frame, then look for the imbalance, execute your trade, allow the process to take place, and watch it fold up. Yes, you'll not win it all, but I'm telling you for the fact that you're going to be profitable along the long run. So let's quickly dive into the lower time frame and execution of this particular trade that's currently running. Possibly I'll drop a screenshot here for confirmation's sake. Come on. All right. Now, let's dive into it. Oof, so many trend lines, so many lines, man. Let me get rid of some of them. These out. Okay. Okay. Now, I'll give you a little bit of assignment here. Please pay key attention. Go to your chart. Identify a valid change of character. Please, if you're having issue with it, you can drop it in the comment section or chat me privately. My WhatsApp line will be in the description. Drop any screenshots of how you actually map your change of character. Then we'll go into it and dive whether it is correctly mapped or not. I'm here to help everyone, all my subscribers. I love all of you guys so much, and I'm ready to give my little assistance that I can. Now, go to your chart, map every change of character you've seen, and let's see whether it is actually valid or not. Now, you can observe that from this particular chart here, there is a change of character exactly at this particular level here. What should we do? Map out the imbalance. You can see, I always say, look for the last imbalance, and you can see the last imbalance is obviously this one standing there. Look at how pinpoint this thing is. You look from this top here down to this level, this is the last imbalance. We have another one here, but I'll always tell you, use the last imbalance, always, especially with this VIX25. Now, that's all for now. Again, coming down to chart today, and what I can see exactly here, you can see this line here. What do you call this? Change of character. Come on. This is change of character. What will I look for? The last imbalance. Where's the last imbalance? Exactly at this particular level here. You can see it is currently mapped, right? The last imbalance, and I execute my trade exactly at this point, and I'm targeting 1 to 5. That's what you can see here over here. Now, why am I taking a buy in this section? Meanwhile, if you look at from the higher time frame, 24-hourly time frame, you can see that the trend line actually break. Come on, let me expand it. You can see that we have a violation of trend line here. Exactly at this particular level here. Should I go straight by looking to short this market? No. Why? Because this is the low here. Sorry. This is the low. Until this low is being taken, until this low is being taken, I have no reason to start shorting this market. No. So, what makes your trend line value is simple. Combining your trend line alongside with market structure will skyrocket your win rate to another level entirely. Combining trend line with market structure is the golden approach to trading trend line. Trend line does not work on its own. In fact, it doesn't determine the actual trend of the market yet. It's just an area on the price charts. So you must take into account the highs and lows of the market printed right in front of you. This is what I want to show you today, and thank you for staying to the end. I love you guys so much. Please support the channel by subscribing if you're new. Hit on the thumbs button to support my video, and I really appreciate it. Bye for now. Peace out.